Happy New Year 2025. Let this year be our life with financially free and solve all of our money problem. Do you guys know you are paying a lot of money from your earnings to other people? Do you recognize any of the expenses listing over here? If you do so, I encourage you watching this full video and try how to cut those expenses, because those expenses are draining all of the money from your bank account, regardless how much you are making it. I have seen doctors like earning 300,000 per year, 500,000 per year, and then they are in debts. And I will show you how to do this. Okay, so over here, for most of us, our income is basically we work or we have a job, or we do some side hustles. That's in most of the cases our income. Those are in most of the cases our expenses. Now, to cover all of those expenses, what we do more work over here, which I strongly recommend not to do. And I showed you how you can utilize your value and convert your value for generating more money. If you didn't watch my previous video, I recommend you to do so. What we'll be doing is we'll increase our income and decrease the expenses as much as we can. Now, for increasing the income, what we can do, we can earn without working. And I made my previous video about how you can make money without working. So I suggest you to watch that video, that way you can earn some more money over here. I also recommend you buy assets, but do not spend any money from your pocket. We'll talk about how you can buy a asset without any money from your pocket. Banks are here for giving you the money. So this is the second thing we can do. And then the third thing is, there are tons of lessons or course materials out there. So focus on expanding your skill. Try to level up your skill set. They will generate you more income stream. Now you might be wondering, well, that's good so far, but how can I get rid of all of the expenses over here? Let me tell you something. Now, mortgage or car payment is one of the most common expenses we have. I will make a separate video for how we can cut this mortgage and car payments. But for now, let's focus on all of those. So travel expense, we pay a lot of money traveling or visiting places. How we can reduce this expense? Well, one of the very common or frequent answer will be, do not travel. No, I don't say so. Do travel, but travel in a different way. Example, if you have a business or activities related to where you are traveling, then you can deduct the travel expenses from your business, and all of the flight cost, hotel cost will be paid by your business, not you. So let me give you an example. I traveled to Niagara Falls. I told you in my previous video. I had a business. I also told you in my previous video. So I traveled there for talking to one of the attorney over there. So I can deduct my travel expense, my flight expense for my business cost. That will help me reduce my tax amount, making more profit, and last but not least, I'm not paying from my pocket. The expense is being paid from my business. And same for all of the other things. Insurances. Have you ever seen what are you paying for your insurance? I recommend you to sit down with your insurance provider and see what you are paying extra. I had 3 cars, but honestly speaking, I did not pay any money for the insurance. State of Florida has a self-insurance coverage policy, and I work with the state and provided no insurance cost to common insurance provider like Geico or Progressive or someone. I will make a full stop over here because this may not work for you. Review the state rule for self-insurance before you do so. And for all of the other things, example, let's say utilities, water, power, phone bill, well, how can I reduce those expenses, right? Phone bill, if you have a business, that business requires a phone, then in most of the cases you are utilizing your phone for the business. That way your business should be paying the phone bill and internet bill. It's not you. If you are interested in how you can deduct all of your expenses, I strongly suggest this book. It's Tax-Free Wealth, written by Tom Wheelwright. Tom Wheelwright is a CPA, and he is a very well-known CPA. He also worked for tax filing for Robert Kiyosaki, the writer of the Rich Dad Poor Dad. I will plan to make a video for all those, but for now you can read his book or watch his video on YouTube, and it will help you. Some of the expenses I made a star mark over here, like student loan payment. Now, why did I do so? And 401k retirement plan, it's your expense because it's taking money from your bank account, right? The reason I did so is because if you lost all of the money, if you are bankrupt and file a Chapter 7 bankruptcy, your student loan payment is not forgivable. So be very cautious purchasing or getting any student loan payment. Long story short, all of your expenses over here should be paying by your business or your assets. Now, important thing about here is we need to know what an asset is. Most people do mistakes on their assets. The best definition of asset I read from Robert Kiyosaki's book, and he says anything that is giving money to your pocket is basically your asset, and anything taking money out of your pocket or bank account, that's your liability. So example, your mortgage payment is taking money out of your bank account, that's why it's your liability. But think about the rental property I basically described in my previous video. My rental property is my asset because it's making money into my pocket, $300 per month. Your car is your liabilities because every month you are paying your car payment, insurance payment, gasoline cost. It's taking all of money from your pocket. That's why it's a liability. But think about the previous video I made. The car I had was bringing me money in my pocket. That's why my car is my asset. So what you need to do, you need to convert all of those liabilities into an asset, and which I promised, I will make a video for converting liabilities into asset. Now think about some of the use cases over here. those are money activities. I cannot draw very well, but I hope you can understand. This is a person and this is a bank. So this is a person icon and this is a bank icon. And those are money activities. So let's say, for example, you deposit or save some money in your bank. Excuse me. Bank provides you 1 to 3% interest. Now, is it your asset or liability? That's your asset because you are making money about 1 to 3%, but I put a question mark over here. We'll talk about this later. And then when you deposit money into your bank, that's your bank's liability. Why it's a liability? Because they need to pay you. Now, someone go to the bank and borrow money for whatever business or purchasing a real estate or car or whatever cases. In this particular case, this person has a liability. That's because he needs to pay the bank. His money will be going out from his pocket to his bank pocket. And for bank, it's an asset because bank is receiving money for this someone. Now, when he borrows this money and he is making profit on his business, if he makes profit from his business, then this person is making some assets over here because the cash is going into this someone's pocket, and it's a bank's asset too because bank is also getting paid when business is doing good. Now, someone borrow the money from bank, they all are benefited. What about you? Important point over here is you make 1 to 3% of the interest of your money, and you are paying the tax for the interest you receive on your tax return. Second thing is inflation is eating your money. In my previous video, I basically described how your value of your money is getting decreased. So that's the inflation. So at the end of the day, you are basically becoming a loser by depositing or saving the money on your bank account. Why not you do the things like this person is doing? But the very first thing, I recommend you do not start right now. Learn all of the process before you do so. Otherwise, it's very dangerous because when you are borrowing money from bank, it's basically becoming your liability over here. So I would let you to digest the concept from here and think about what assets you can buy and what liabilities you can reduce. A lot of the people say house or your home is your asset. It's not, because it's taking money out of your pocket every time. If you don't have a mortgage, it's still taking money out of your pocket because you are paying property tax. Over here is 401k or retirement plan. A lot of people or advisor will tell you, do some savings, make some retirement plan. But think about this. If you have a retirement plan, the money is going out from your pocket and it's going directly to the Wall Street. So whose asset is this? It's Wall Street's asset. That's because they are making money, they're getting money in their pocket. It's your liability because its money is getting out from your pocket. I hope this concept makes sense. But since those are all of the financial decisions, again, I'm not a financial advisor, so talk to your financial advisors, discuss the concept you have, and reduce all of the expenses from there, and you will be financially free. Thank you.